Start by imagining a scenario where tax season arrives and you are buried under a mountain of receipts, struggling to separate a client dinner from a family outing on your bank statement. This is the reality for millions of entrepreneurs who still rely on personal credit cards for their business expenses. But in 2026, the financial landscape is shifting, and clinging to this habit is not just inconvenient. It is a strategic error that could cost you thousands of dollars and stunt your company growth. The primary reason to stop using personal cards immediately is the critical need to separate your personal and professional finances. When you mix these two worlds, you create a chaotic paper trail that makes bookkeeping a nightmare. Every time you swipe your personal card for business software subscription or office supplies, you are muddying the waters. This lack of separation can actually pierce the corporate veil, which is a legal concept that protects your personal assets. If you have set up an LLC to limit your liability, but you treat your business bank account like a personal piggy bank, a court could decide that your business is not a separate entity at all. This means that in the event of a lawsuit, your personal savings, your car, and your home could be at risk. Getting a business credit card is the first line of defense in maintaining that crucial legal barrier. Beyond the legal safety net, there is the massive advantage of building a dedicated business credit profile. Just as you have a personal credit score, your business has its own creditworthiness that needs to be nurtured. When you use a personal card, your business activity is only affecting your personal score, often negatively if you have high utilization. By switching to a business credit card, you start reporting to commercial credit bureaus like Dun & Bradstreet, Equifax Business, and Experian Business. Establishing a strong business credit score is the key to unlocking future capital, getting better terms on loans, and securing trade credit with vendors without having to rely on your personal guarantee forever. Think of it as building a reputation for your company that stands on its own. Another major factor is credit utilization. Personal credit cards typically have lower limits compared to business cards. If you need to buy inventory or pay for a large marketing campaign, putting $10,000 on a personal card with a $20,000 limit spikes your utilization to 50%. This can tank your personal credit score overnight, making it harder for you to get a mortgage or a car loan. Business credit cards are designed for higher spending volume. They often come with limits that are 5 to 10 times higher than personal cards, meaning you can spend what you need to grow without wrecking your personal credit score. Furthermore, many business credit cards do not report your balance to your personal credit report unless you default, which keeps your personal debt-to-income ratio looking clean. Let us talk about expense management and tax deductions, because this is where the time savings are enormous. Business credit cards often come with robust reporting tools that integrate directly with accounting software like QuickBooks or Xero. Instead of manually entering every transaction, you can automate the process. At the end of the year, you can instantly download a categorized year-end summary that shows exactly how much you spent on advertising, travel, and operations. This makes it incredibly easy to identify every single tax deduction you are eligible for. Missing out on valid deductions because of disorganized records is effectively throwing money away. The rewards structures on business credit cards are also specifically tailored to how companies spend money. While personal cards might give you bonus points for groceries and streaming services, business cards offer massive multipliers on categories like social media advertising, shipping, software subscriptions, and office supply stores. If you are spending $5,000 a month on Facebook ads, using a personal card that gives 1% back is a wasted opportunity. A proper business card could be giving you 3 or 4 times the points on that spend, effectively giving you a discount on your marketing costs. These points can then be reinvested into the business or used to cover expensive travel costs for conferences and client meetings, allowing you to travel in comfort without hurting your cash flow. Speaking of cash flow, business credit cards provide a float period that is invaluable for managing your working capital. When you buy inventory or pay for a service today, you might not have to pay the credit card bill for 30 to 50 days. This grace period allows you to sell the inventory or collect payment from your client before the money actually leaves your account. This is basically an interest-free short-term loan that can be the difference between making payroll comfortably or stressing about bank balances. In 2026, we are also seeing a rise in specialized business cards for startups and e-commerce brands that do not even require a personal credit check. Instead, they link to your business bank account and analyze your revenue to determine your limit. This is a game changer for founders who want to protect their personal credit completely. Another often zeroed aspect is the professional image you project. When you take a client out to lunch and pull out a personal card with a cartoon character or a generic bank logo, it sends a subtle message that you are operating a hobby, not a serious enterprise. Paying with a corporate card signals stability and professionalism. It shows you are established. Additionally, business cards often come with perks that personal cards simply do not offer. We are talking about free employee cards with customizable spending limits, so you can give your marketing manager a card that only works for ad spend and has a set limit, preventing unauthorized purchases. You also get access to business tier purchase protection, extended warranties on expensive equipment, and travel insurance that covers your team. The security features on business cards are often more robust as well, with the ability to instantly lock cards, set category restrictions, and monitor spending in real time. If you are running a business with employees, trying to manage expenses for reimbursements is a slow and prone to error process. Issuing employee cards simplifies everything and gives you total control and visibility. Let us not forget the Synap bonuses. Business credit cards are known for offering some of the highest welcome offers in the industry, sometimes with thousands of dollars in travel or cash back. Achieving these bonuses requires high spend that is natural for a business, but difficult for an individual. Leveraging these bonuses can pay for your next work laptop or a business trip entirely. Sticking to a personal card also limits your financial flexibility in a downturn. If your personal credit takes a hit due to a life event, your business credit line could be cut off if they are linked. Having a separate business credit profile diversifies your financial risk, ensuring that a personal issue does not immediately paralyze your business operations. Looking ahead to the rest of 2026, the cost of doing business is rising, and efficiency is the name of the game. You cannot afford to waste hours every month separating expenses or worrying about credit utilization. The transition to a business credit card is a one-time administrative task that pays dividends for the entire life of your company. It creates a clean psychological break between your personal money and your business money, which is vital for the mindset of a serious entrepreneur. You need to treat your business like a separate entity if you want it to grow into one. Stopping the use of personal cards is the first step in maturing your financial operations. It prepares you for audits, simplifies taxes, protects your assets, and rewards you for the spending you are already doing. Do not let inertia keep you in a risky position. Review your spending. Find a card that matches your highest expense categories and make the switch. Your accountant will thank you, your future self will thank you, and your business will be built on a foundation of financial strength rather than a fragile mix of personal and professional funds. Start building your business credit history today so that when you need a major loan for expansion in 2 years, the bank sees a solid track record rather than a blank page. Take control of your financial destiny and stop using personal cards for business.